Rajeev Mehrotra. He is the CMD of Rites with us on the show. Good to have you on board, Mr. Mehrotra. To begin with, can you just highlight the key features of your consultancy vertical, what you would consider to be a good growth rate here, and what kind of growth you can clock in for this segment in the year ahead?
See, we are predominantly a consulting company focusing on railways, metros, highways, airports, ports sector. All of them have seen growth in the last year, and accordingly, company made use of the opportunities. We recorded growth of 36% in the revenue and 37% in the PAT. So that is on the consultancy segment. All other business segments, we are into exports of rolling stock, we are into turnkey contracts execution, we are into energy management, we are into leasing of locomotives. All those saw growth in the last year, which has been reported already.
Can you tell us a little bit about the relationship between consultancy and turnkey projects? What kind of the revenue recognition can we see from these two verticals?
Basically, consulting only fee income is booked, and this is not either consultancy or turnkey. The turnkey is an additional business because the teams at Rites, they are already handling similar arrangements of design or contracting, etc. So it was easy for us to take on the additional work of turnkey projects, for which there are enough opportunities in the country as well as outside. So for the time being, we have taken only railway projects in India, doubling third line, electrification, workshops, etc. So there is no competition between consultancy and turnkey.
Okay, 70% of your business does come from the railway sector as well. Any plans that you may have to reduce the dependence on purely railways, and what are the other verticals that you may be focusing in on or looking at to try in order to de-risk the business?
We have a presence in several sectors, and wherever the opportunities will arise in future, whether railways investments pick up or metros, highways, airports, we will be able to position the business priorities easily. And I think that's a strength this company has before the new investment plans of the governments open up.
Now, in terms of your cash surplus, that's around 1,200 crores, if I understand, on the balance sheet. How are you looking at utilizing these funds?
Yes. We have requirement of about 500 crore rupees for working capital. Other than that, there are some capex plans for expanding our locomotive investments. We do locomotives hiring business, so we plan to add some more locomotives. We are planning to add some office spaces in Calcutta, Delhi, also in Lucknow. Then there are investments already shortlisted for station development, for our energy management business. So put together about 900 crore is already tied up. So there might be a surplus of 300 crores, which we are still evaluating how to take forward.
Okay. How much more divestment will occur on behalf of the government, and when can we expect to actually see this take place?
Yeah, government has decided for further 15% divestment, and maybe by end of Q2, this might be happening, Q2 end.
Okay, you have some cash available, and I understand you're looking to enter the Ham Road project business. Can you tell us a little bit more about this foray? What is the current cash at hand that's available?
No, this is a possibility, but we do not have any concrete proposal right now. We are looking at the possibilities.
Okay, fair enough.
Nothing has concretized as yet.
Okay. And can you tell us a little bit more about the MOU signed worth close to 2,300 crores? What is the update there?
We sign annual agreements with the administrative ministry, listing out various financial and other performance parameters. And for 1920, there is a 17% growth committed, which we take as the minimum we would try to strive for in FY20. 17% growth in top line.
I want to talk about the receivables as well. How is it that you've managed to lower your receivable days, and to what extent has this improved your working capital cycle as well? And then what should we build in estimates for receivable days for FY20?
We have been trying to optimize the receivables cycle, and we have brought it down to 100 days. And mainly, the receivables happen in the consulting business, 3-4 months business or billing cycle is there. So 100 days is actually an optimum business cycle. This has further optimized because in turnkey business, we are not putting any working capital. This is based on the client's deposits. Again, in exports, these are against line of credit, so there's no capital blocked for a longer time. So put together, the efficiency of receivables has added to cash surplus being invested, and higher returns came in other income also because of that.
Can you tell us about the new timeline for the Sri Lanka project, which had been delayed? What is the expected revenue from this project, and when will it be realized?
There were 2 orders from Sri Lanka. One is about 590 crores, against which DMUs are already going. In fact, this week also we are going to ship one more set. So this would be over by Q2. Another order, we received 600 crore rupees for 160 coaches. We are trying to do a prototype by end of this financial year. If not by end of, because there are a lot of design changes required to customize for each customer's requirement. And we are hopeful that we would be able to ship out first lot, or we call it prototype in last quarter. But if not last quarter, surely beginning of next year's Q1, we'll see exports of that. Exports are going to be a focus area in the times to come.
All right, understood. Thanks so much for joining in and giving us a view on how business is shaping up, as well as the outlooks on your individual projects.